Good morning, ladies and gentlemen, and thank you for attending this virtual meeting organized by SKP Securities. On behalf of Rose Industries Limited and SKP Securities, it is my pleasure and privilege to welcome you to this Q2FY22 financial results webinar. We have with us Mr. Anup Jatia, Executive Director, along with Mr. Sandeep Chokhani, Director, Mr. Amrish Daga, GM Corporate Operations, and Mr. Ratan Agarwal, CFO. A reminder, this meeting is being recorded, and during the discussion, there may be certain forward-looking statements, and these must be viewed in conjunction with the risks the company faces. We'll have the opening remarks from Mr. Jatia, followed by Q&A session. Over to you, Mr. Jatia. Thank you.
Thank you, Naveen. Welcome, everybody, and wishing everybody a happy Dhanteras. Today, we would like to share our results for the second quarter of FY22, and we would like to start with the presentation. Is this visible to everybody?
Yeah, absolutely.
Okay. So thank you very much. This is the disclaimer which Mr. Naveen has also just mentioned. Just to give a quick update on the business that we do for people who have joined for the first time. Chemical distribution business, and the other is the chemical manufacturing business. On the distribution side, we basically import and distribute a wide range of specialty and performance chemicals, which we supply domestically to various Indian chemical companies. The majority of our distribution business is with principals overseas, especially principals in Japan. We also have certain principals in Germany, as well as two principals in China, but the majority of our distribution business is dependent upon Japanese principals. The chemical manufacturing business is started in 2013 with the manufacturing of acrylamide. That time we started with a 10,000 metric ton plant, which we gradually expanded. Currently, our capacity is 20,000 tons for merchant sales and another 12,000 tons for captive consumption, a total of 32,000 tons of acrylamide production. We also have a production of polyacrylamide liquid. This is a 40,000 metric ton per annum plant, also located at the same unit at Jagadia, Gujarat. We are currently in the process of starting our acrylamide solid production. This is NMA. This is a 2,000 metric ton plant. We have completed piloting, and the initial batches are now gone to customers for their approvals. So this is also something we expect to start within this quarter. The other project, the larger project, which is our prime focus, is the polyacrylamide solid project. This is in progress on the R&D side. We expect to entirely focus our R&D efforts and R&D team on the polyacrylamide solid production activities starting from January 2022, once we complete the other projects which are in hand. We also have a subsidiary in Japan, which is known as BR Chemicals. It's a local Japanese trading firm dealing with Japanese principals, as well as other overseas principals, for sale of various chemicals. Now I would like to hand over the mic to Mr. Amrish Daga so he can take you through the financials. Over to you, Amrish.
Thank you, Anupji, and wish a very happy Dhanteras to all our participants. Uh, in this slide, we are going to start off by looking at some of the key numbers from the financial statements for the current quarter, the previous quarter, as well as the corresponding quarter two of the last financial year. We see that the top line has a growth of 68% over the previous quarter, owing to higher revenue from both the manufacturing as well as the distribution sectors. This has led to a profit after tax of rupees 90 million for this quarter, up 25% from the previous quarter and 51% from the quarter two of FY21. Despite better margins in the manufacturing sector, however, we see that the EBITDA percentage is slightly lower compared to the previous quarter, and the same will be explained in subsequent slides. Some important ratios such as the EBITDA margin percentage, the PAT margin percentage, and the EPS, which has actually grown to 1.77 for this quarter, are also illustrated here. Moving on to the next slide now. We look at the sources and application of funds for the current quarter, the previous quarter, as well as the Q2 of FY21 in this slide. As we can see, we continue to have zero long-term debt, and all ongoing projects are currently being financed through our internal accruals. The same is depicted in our very strong debt equity ratio of 0.15 right now. The inventory at the end of the quarter has reduced as the demand picked up in most of the sectors, and the company had adequate stocks to meet the customer's requirement on time. The company enjoys a very strong return on equity percentage of 33.9%, up by more than 4% from the previous quarter, and also boasts of a healthy return on capital employed of 44% at the end of Q2. Moving on to the next slide. We look at the total revenue and the EBITDA for the previous quarter, the current quarter, as well as the quarter two of the last financial year in this slide. This has been made, we see that on the back of strong performance from both the manufacturing and the distribution sectors, we have been able to cross the milestone of rupees 100 crore revenue from sales for the first time in this quarter. This has been made possible by the strong demand for our stock and sale products, owing to supply disruptions and inadequate planning by other market players. We have been able to penetrate new markets and increase our customer base and gain market share at the same time due to our long-standing policy of maintaining adequate stocks and our strong relationship with our principals. I think the slideshow is not visible.
Just give me a sec, Amrish.
Yeah.
Anupji is sharing the slides, the PPT.
Yes.
Friends, just give us a moment while we fix this.
Hello?
Yeah, Anupji.
Yes.
You'll probably have to open the slide. If it's open in the background, you'll have to share it again. probably got disconnected in case there was a net fluctuation. It might have got disconnected, so you'll have to share it again. Amrish, in case you have the PPT, I can make you the co-host and you can take it forward.
Yes. Let me check.
Okay, is everybody connected again?
Yeah.
Go ahead, Amrish.
Yeah. Sorry for the small interruption. Just to carry on, as I was mentioning, the long-standing policy of the company to maintain adequate stocks and the fact that we have such strong relationship with our principals made it easier for us to service the customers at this point of time, which helped us in these increased volumes. The increase was also been achieved as the demand for acrylamide increased and the prices also were pretty moved in the higher direction during this quarter, giving us improved sales and better product realization. Now, moving on to the next slide. In this slide, we have a look at the segment-wise distribution and the geographical distribution for the sales for this quarter, the previous quarter, as well as the Q2 of the last financial year. As we can see,
recording stopped.
Should I continue? Hello.
Recording in progress.
Yeah. So this slide depicts the geographical distribution. We will be seeing in our following slides how the manufacturing and distribution sectors have both grown in absolute terms during this quarter. However, due to the much larger growth in our distribution business for this quarter, especially some of the key products, we see that the overall distribution sector is contributing almost 3/4 of the total sales for this quarter. Going forward, however, as the sales pick up for both our existing product lines as well as the new products getting into our manufacturing fold, we expect this balance to tilt more towards the manufacturing sector. In terms of the geographical spread, our exports for acrylamide liquid continues to be hampered by the extremely high freight costs, even though there is substantial demand at present for our products in most international markets. This impact is especially more in countries where there are local manufacturers for the same product. We hope to be able to pick up on our export volumes in the future quarters and improve this overall balance between the exports and local sales. Now, let me hand over the mic going forward to Mr. Ratan Agarwal to take us through the rest of the slides. Over to you, Mr. Agarwal.
Anupji, you need to unmute yourself.
Okay, thank you.
Thank you, Dagaji, and wish everyone happy Dhanteras and a prosperous Diwali ahead. Just this is the financial distribution of the company for our distribution business. The company has achieved highest ever sales in distribution business as well as highest ever quarterly sales as a whole. Sufficient stock of material at the time of demand helps the company to achieve higher sales and realization in products like acrylonitrile and acephalic acid, etc. EBITDA is lower during the quarter as compared to previous quarter due to higher sales of low margin products, that is metacresol. Again, one of the top selling products, resorcinol, saw margin pressure due to oversupply of material by new small players from China due to low demand in their domestic market. Also, due to low demand in automobile and dyestuff sector in the domestic market, the demand was lower during the quarter, resulting to lower EBITDA. Moving to the next slide. Manufactured sales continued to remain strong due to increased volume of manufactured products. Domestic demand of acrylamide has increased and the company has been able to increase its market share. Further, the company has been able to add new customers for its ceramic binder and has increased its market share. As explained by Mr. Daga, the export was lower due to the higher freight cost worldwide, and that has the export was lower due to that higher freight cost. Handing over to Sandeep ji.
Good morning, everybody, and wish everybody a very happy Dhanteras. In the manufacturing division of the company, we are having a few projects, ongoing projects, which are either under implementation or under trial production. One of them being acrylamide solid. Currently, acrylamide solid is being produced and sold only by China worldwide, and we plan to replace completely 100% of the Chinese imports under the government's Atmanirbhar Bharat initiative. We expect a capex outlay of 80 million rupees, and the commencement of operations is expected in Q3FY22. During the recent months, the Chinese imports have decreased due to lower production and also supply chain disruptions, which has resulted in increase in prices from around 180 rupees to 240 rupees, which gives us a good head start once we get into production. Annual revenue expectation from sale of 3,600 metric tons per annum capacity would be turning into, we would be achieving around 850 million rupees. The next product under implementation is N-methylol acrylamide, also called as NMA. Currently, this product is completely imported. Again, we plan to substitute this by our own production. The capacity planned is 2,000 tons per annum. We've already conducted trial production at the factory, and samples are being given to customers for their evaluation and validation. We expect a revenue of 400 million rupees at full capacity for N-methylol acrylamide. The next product which is under implementation is polyacrylamide solid. The polyacrylamide solid plant capacity is 10,000 metric tons per annum, which is equivalent to the current domestic market size, but this does not include the gas and oil segment of polyacrylamide solid. The capex estimated is around 600 million rupees. We expect to have an annual revenue of nearly 2,000 million rupees at full capacity. At the moment, we are undergoing implementation of polyacrylamide solid. At the moment, we are undergoing the implementation of acrylamide solid and N-methylol acrylamide. Thereafter, we will shift our focus to polyacrylamide solid. which should be around Q4/22. We've also noticed that the prices of PAM solid in the recent times have escalated by 15 to 30% in the last quarter. We have also evaluated that there is a very high demand internationally from the oil and gas sector for this product. I would again hand over the mic to Mr. Anup to take it further. Thank you.
Thank you, Sandeep. To share with you the outlook for the current quarter, we have also shared our performance review and the press release last night. So some of it will be covered in there as well. To provide you with some updates, basically on the chemical distribution side, the high energy costs as well as reduced Chinese production and other shortages are currently causing an unprecedented price rise across several products in the chemical industry. Fortunately, we have stocks as well as a good import pipeline, which allows us to be well positioned to ensure regular supplies to our clients. On the acrylamide liquid side, domestic demand has been very strong. And the realizations have also increased by 20% in this quarter. The export demand is the demand itself is quite healthy. There is good requirements, but of course it is impacted by the logistics costs and also other year-end issues like companies wanting to keep stocks at a low level at the end of the year, especially for countries which work on a January to December financial year. Due to the situation domestically, we expect to reach 90% market share in India. Typically, we are at around 70 to 80% market share, but in this quarter, we are expecting to reach 90%, if not higher. On the polyacrylamide liquid, things have been also very encouraging. The market share has been improving, especially in October. We have increased our sales by 70% over the September numbers. There is a severe shortage currently in this market as well from the market dominant players. And we, because of our strategy and always maintaining good levels of inventory, have been able to be a beneficiary of the situation. We expect overall market share to improve by at least 50% during this quarter. We also are working on a development of a new grade, which is a further improved, further robust grade of ceramic binder, which we intend to call Brilbind CE02. Currently, our product is CE01. So once the CE02 is launched, we expect to get even further expansion in the market. So these are some of the situations going on in the current quarter. And thank you very much for your time. And I now open the floor for any questions that people may have. Over to you, Naveen.
Thank you, Anup. Anyone who wishes to ask a question, raise their hand. We'll unmute you and take your question. Participants are requested to introduce themselves before asking the question. We'll just wait for a minute while the questions line up and then we can take them. Okay, as I see, there are a few questions which have already lined up. First question is from Pratesh Chheda. Pratesh, please go ahead.
Yeah, am I audible?
Yeah, and before we start, request participants to restrict themselves to one question and give the others an opportunity. Once the entire queue is done, we'll come back to you. Thank you. Pratesh, please go ahead.
Yes, sir. Sir, I've been attending your call. This time you have given out the breakup on manufacturing and distribution revenue. So just clarifying a couple of things here. One, what we see in the revenue so far at about 20-25 crores that we saw. in the presentation on a quarterly basis largely reflect the acrylamide output sale numbers, because the polyliquid plant, it seems, had started from Q4 of last year, and I'm a bit confused here because past quarters talked about ramping up, but when we look at the QOQ built up in revenues, it hasn't, it's still not reflecting. So at what utilization level is then the polyacrylamide liquid plant? And when this plant gets fully utilized, as per what you mentioned, that October is 70% higher than September, and capacity utilizations have gone up and market share has gone up. So I want to understand the bridge between the last year's revenue, or let's say the quarterly run rate, and once polyacrylamide liquid comes in, how much is the additional revenue? Because you already mentioned N-methyl acrylamide, when it comes, what is the additional revenue? Poly powder, when it comes, what is the additional revenue? That is very clear in the presentation. But this bridge between acrylamide to polyacrylamide liquid, I was not able to understand. If you could help us understand.
Okay, thank you, Mr. Chedda. I think I understood your question. The potential revenue from the polyacrylamide liquid business on the basis of a 40,000 ton capacity is approximately 100 crores per year. However, the prices of polyacrylamide liquid have been increasing. So those numbers may change. Currently, we are operating at around 25% of our capacity. So this is where we are right now. Have I been able to answer your question?
Yeah, when should you reach 100% capacity utilization of polyliquid? So now it's very clear that 100 and 100, so 200 crore revenue is the number for acrylamide plus polyliquid as of now on the current, on the old prices that you're referring to.
See, for the acrylamide side, the acrylamide, our merchant sale capacity is 20,000 metric tons. And at today's prices of acrylamide, which are approximately 115 rupees a kilo, that works out to around 230 crores as today's prices. But I don't know how well today's prices can be reflective of the future prices. Today, the prices are quite high. We have not seen such high prices ourselves since we started this plant. So the acrylamide with the 20,000 tons gives you around that much based on today's prices. And the acrylamide solid, that's again additional, again based on today's prices, that brings in another 85 crores. So that is the kind of number. And on the polyacrylamide liquid side, if we're talking about when we expect to reach 40,000 tons, running that at 40,000 tons may still take longer because of the fact that polyacrylamide liquids, especially the product we are currently making, which is the ceramic binder, this requires trials, and it takes time to convert each and every customer. But fortunately, because of the existing supply disruptions going on in the market, the conversions have become a lot faster because the customers are in a hurry to approve our product right now. So we're expecting during this quarter to be able to significantly increase our market share. And going forward, we hope to be able to hold on to that market share as well. Besides that, in polyacrylamide liquids are basically is a type of product. There are a lot of other polyacrylamide liquids which we also intend to make going forward. So as those products get launched, for example, the textile printing ink binder, that's also a polyacrylamide based liquid. So when those type of products also get launched, these will add to the revenue, but it will be all within that 40,000 ton total.
You mentioned 100 crores for 40,000 tons, right?
100 crores is the max if we only sell these, well, I won't say the max, but the 100 crores is the estimate if we are only doing the binder production. If we add other products, then those numbers can increase.
And acrylamide prices move from 60 rupees to 115, right?
Was approximately 90 rupees. So from
Otherwise,
yeah.
But at 90 rupees, and if you are always, or if you are selling 20,000 tons, then you never had a 180 crore manufacturing revenue. So the prices would have moved up from even a lower number earlier, right? Because your revenue on manufacturing has been about 100 crores.
So we are not operating at 100% capacity currently. A lot of you have to understand that the Indian market has a finite demand. And the Indian market, we are already covering around 80% of the market. The incremental demand comes from the export side. And with the exports currently constrained due to the high freight costs, the entire capacity cannot be utilized right now. Once the freight cost starts to come down and the supply chain disruptions on the export side also get resolved, we expect to be able to run the plant at a much higher capacity. The Indian market itself.
What is the utilization?
We are already having 80% of the Indian market share.
And what is your utilization on that merchant sale capacity?
60%.
Sorry, I missed it. 60, 65?
60%.
Okay. Thank you very much, and wish you a happy Diwali and happy New Year.
Yes, thank you. Same to you, please.
The next question is from Dhaval Shah. Dhaval, please go ahead.
Yeah, hi Anup, can you hear me?
Yes, I can, Dhaval.
Hi, happy Dhanteras, guys. Thank you so much for the presentation. I just had one question. Looking at the logistics costs coming down and keeping your raw material prices where they are, in terms of two things. One is the stickiness of the margin. Do you foresee these margins to be sticky for the next couple of quarters more? And secondly, in terms of your capex on this new product, seeing the demand from China, is there any way to process these or expedite these faster to grab the market share more faster? And if you were to do that, how are you going to fund this capex?
Okay, Dhaval, thank you. I had a question on the second part of your question. Are you talking about the polyacrylamide solid, or are you talking about the projects which are currently getting set up this quarter?
The ones which are getting set up this quarter. The polyacrylamide solid you are starting in Jan 2022.
Yes. Okay. So the production for the two products which are currently ongoing, which is acrylamide solid and NMA, these are expected to start in this quarter. So I don't see us being able to do it any faster than we're already doing. These will start this quarter. So we should start seeing those numbers coming in from next quarter. It is true that the demand internationally is quite strong on those products, especially because China has been the only producer, especially for the acrylamide solid. China is the only producer worldwide. So there are a lot of companies waiting for our plant to be operational so that they can start placing orders to India instead of China. So yes, we are focusing on that, and that is going to happen. The other question that you asked about the stickiness of the margin. The margins are largely dependent upon two factors. One is, of course, the prices of the raw material, and secondly, on the ongoing disruptions in the market. So when we have disruptions like these and situations in China where production is down, our competition coming in from imports has reduced. And also the prices coming in from China have increased. So this naturally does help us increase our margins as of today. At the same time, fortunately, unlike a lot of other chemicals, our raw material price for acrylamide has not been increasing. It's in fact on the downward trend. So the overall spreads that we are seeing currently in our business is quite healthy. How long these same spreads will continue, it's always, of course, very difficult to tell. But looking at it historically, we've always had healthy margins in our acrylamide business. So even if we're not able to maintain the same level of margins today, we do expect to continue having healthy margins in the business as we have been in the past.
And the capex for the new products, how are you going to fund them? Are you looking at capital raising, or would you be doing it through internal accruals?
So the acrylamide solid as well as the N-methanol acrylamide, this capex is already completed, and it's been done internally.
Thank you.
Yeah. Thank you. Anybody else?
Thanks, Dhaval. Okay, friends, we've just started the Q&A session, so request you to bear with us. A few participants who messaged their questions. Bear with us, we'll take all the questions. The next question is from Yog Rajni. Yog, please go ahead.
Hi, am I audible?
Yes.
Yeah, hi. Happy Dhanteras and congratulations on the good results.
Thank you.
I had a question regarding the EBITDA margins. As we have seen, they have fallen on the distribution side. If you could just give us some more color, some more information on that, it would be really helpful.
Okay. Yes. So the main reason for the fall in the distribution margin in the last quarter from the distribution business is because of a sharp increase in our sales of metacresol. Metacresol is a product that we distribute with Lanxess Germany as our principal. This is one of our legacy products. We have been dealing with metacresol since a very, very long time. And it is a product where our margins are very low. So we continue this business as a legacy product. And because this is one of the products which the company started working with, in terms of profitability, the profitability is very low. And it's close to about 0.5% would be our margin approximately on that business. So it is extremely low. And whenever we have a higher sales of that particular product, it does affect our overall EBITDA margins. But in terms of all the other products that we've done, our margins have been very healthy for all the other products.
Do we see a margin remaining compressed over the immediate next few quarters, or do we see a more normalization in your opinion?
I expect, like I said, it really depends on how much metacresol is also sold in that particular quarter. So last quarter, for example, not Q2, but Q1. In Q1, we had no sales of metacresol, for example. So, not having a metacresol sale does help in terms of a percentage margin. But we don't really focus on these percentages. We are more focused on the total profitability or the total figure that we get from our business rather than looking at a percentage. So yes, we do expect to have a little bit, this time, if you see our PAT margin was around 8.8%, I believe, around 9%. We expect these margins to increase a little bit going forward and to, stay above a certain level. But yeah, like I said, it really depends on the product portfolio in that quarter.
Can I ask one more question, or should I join later?
Go ahead.
I wanted some more color on our shipping problems. Could you just highlight how the logistics costs have changed, and what is your opinion on the supply chain for your products in the near future? If you could give us some color on that.
So the main issue we are facing on the supply chain side is not on our distribution business in terms of our import costs from our distribution principals is not affected as much by the logistics costs, because the products sold by our principals to us are all sold based on an international price basis, and they have to bear those additional freight costs if they do. So we are not really affected in terms of our costs. We are not affected by the freight related issues on our import business. We have a benefit on the other hand because of the supply chain disruptions, because companies which work with Chinese principals or other principals which are unable to bear these type of price hikes on the freights. They naturally have to, they're not able to bring in the product. They're not able to import product. There are delays. So all of this helps us, especially because we always maintain high levels of inventory in all of the products that we manage. So today the market is such that whoever has inventory wins that business. So that's where we are. The main problem we face on the freight related issues was on our export side of the business. And that is also mainly when we talk about the US market. The US market is a very large consumer of acrylamide. And we had entered the US market just before COVID hit the world. And we had started to get good volumes of business from the US market. But right after COVID, when the oil prices fell, that business was affected because a large part of our US customer base is in the oil and gas sector. So the acrylamide exports to the US were affected first because of the crash in the oil prices. Then when the oil prices recovered, again, the demand from the US market again picked up. But now the freight costs made it unviable to export from India to the US because the US also has local production of acrylamide. So when they compare their local prices of acrylamide with our prices of acrylamide, it doesn't make much sense for them to import the product. So this is where we were hit. Otherwise, if the freight costs to the US were as they were in the past, we're quite confident we would be running our plant at 100%, 90 to 100% capacity today.
Do we see any normalization in shipping costs in the near future, or is that a long-term problem?
I think that's it's difficult to tell right now, but I believe the things should start to normalize a little bit going into the next year, into 2022. A lot of the peak shipping problems have happened recently due to the Christmas season in America. But now with the Chinese economy also slowing down, Chinese production coming down, a lot of the international business is definitely affected in terms of freights. So I expect in 2022 sometime this situation, which is abnormal, should start to alleviate. But I'm not an expert on logistics. I'm sure we can get more information on that from companies which specialize in that sector.
Yes, definitely. Thank you so much.
Yes, thank you.
Thanks, Yo. Okay. Before we take other questions, Anuji, there are a couple of questions from participants that have come up. This one is from Manish Bohra. Quarter on quarter, there is a decline in gross margin and EBITDA margin. While many commodity prices and logistic costs have moved up majorly in ongoing Q3. Do we see any decline? And if yes, how much decline do we see in margins in Q3 and Q4?
So honestly, we don't see this decline in when we analyze our product, our business portfolio on a product-to-product basis. Unfortunately, what happens is when the results are shared, they're always shared on a overall basis. And like I mentioned, the main reduction is due to the increase in metacresol business. But when we look at it product to product, we have seen largely an increase in the margins for most of the products that we handle. We've seen some reduction in, mainly it's the metacresol where the problem is there. But otherwise, I would say in almost all the other distribution products, we have seen an increase in margins. In acrylamide, we have seen an increase in margins. In the polyacrylamide, we have seen an increase in margins. We're seeing increase in margins across most of the products.
Manish, I hope your question is answered. Ashish, before I take your question, there are a couple of questions from Lucas Dongre. I'll just read them out. How will our company manage the high crude oil prices in the coming quarters, which has impacted the margins a bit in the last quarter? And second, what were the capacity utilizations for acrylamide liquid and PAM liquid?
Okay. The second question, I believe I've already answered. Acrylamide liquid was 60% of merchant capacity, and polyacrylamide was 25%. The first question about the crude. So as of now, we are not directly affected by the crude oil prices. The products that we import, in terms of their pricing, in certain cases, those prices may have moved up, but they are all in line with international market prices, and accordingly, the selling prices also increase when we sell. So the crude oil price increase has not given us any kind of
Very
negative.
positive.
Can you hear me?
Yeah, please go ahead.
The crude oil price
So
increase
it's
has
positive. So if you
directly affected us in any way as such.
100 crore ka
Anuji, please go ahead.
Yeah. Yes, I will. I think I've answered the question.
Yeah. Okay. Next question is from Ashish Ubgan Labar. Sorry if I've mispronounced your last name. Ashish, please go ahead.
Can you hear me?
Yes.
Ashish? Give me a second, please. Yeah, Ashish, please go ahead.
Yeah, so we've taken a lot of projects on hand, and last year I think we were about 400 crores of sales, and there's a lot of price escalation that has taken place. So if I have to have a say maybe a 3-year out picture of whatever we are doing as far as expansions and things normalize, so what is the kind of top line that we are looking at? And linked to that, I just wanted to understand, because you have a lot of market share in the products that you have, especially in the domestic market. So what's the potential we are chasing here in terms of overall, I mean, domestic plus exports? Both those are linked questions, basically.
Okay. Thank you for your question. So basically, what the overall, we're not exactly chasing any particular number that we have. What we do is whenever we add a product, let's say we are adding a product either in the distribution business or we're adding a product into the manufacturing business, our focus is to maximize our sales and maximize our market share in that product. That is really the main thing that we focus on. And in the process, what happens is that prices, of course, will keep going up and down. So today a product like acrylamide, which was let's say an average price of 70-75 rupees, is at 110 rupees. So suddenly your revenue numbers change, even though you've not. When we So I can't really give you a very clear answer, unfortunately, I guess, on that. But considering this particular year, I can say that we are targeting. And for example, sorry, one more thing is that the number you had mentioned of 400 crores, I believe that's you're looking at the consolidated numbers. I'm talking purely on the standalone figures right now. But on the standalone basis, we expect this particular year, FY22, to probably have around the 360 crore turnover, which is compared to the last year, which we were at 230 crores. So that's the kind of growth we're expecting this year. Going forward, as the new products get added, these, of course, we are expecting these numbers to increase. By how much and exactly the numbers, we don't really have something to share with you right now, but we had provided a number of 650 crores a few years ago as our initial number, which was including the polyacrylamide and the polyacrylamide solid, polyacrylamide liquid, and our distribution business. But after that, we've added 2 more products. So again, these numbers will definitely be changing.
Okay. If I may add one more thing, I just wanted to understand this the research or the R&D or the technological expertise. Is there any support from the technological tie-up that you have or the principles that you have? So is there R&D entirely in-house or is it supported by our principals there? For the
Yeah, that's
manufacturing
a
piece.
good question. Yes, thank you. So it really depends on the product again. Like for example, in acrylamide, we have already completed our plant and everything. But whenever we need any kind of inputs, whenever we need any kind of upgrades in technology, we work very closely with our principal licensor, Mitsui Chemicals, for that. And we regularly enter into understandings with them for upgrading these technologies. So that's something that we do. On the R&D side, again, when we work on a particular product, there are, for example, let's say the acrylamide powder, when we were working on the acrylamide solids, again, we entered into a technical services agreement with Mitsui Chemicals because they used to produce this product in the past. So they do provide us with certain guidelines, but a lot of the finalization and things and the final plant layouts are done in-house to look at energy costs in India and ease of operation and various other factors. So we do use the inputs we get from our licensors and technology providers and then modify them to suit our requirements to that extent. And it is all shared openly with the other side. When it comes to polyacrylamide solid, for example, we are currently distributors for a Japanese company for polyacrylamide solid. We intend to also sell some of this polyacrylamide solid to some of these overseas principals as the project goes on. So we do get assistance from them also. Since they are also potential customers, they also have an interest in ensuring that our project takes off and that it's successful, so that they can buy our product and they can also de-risk themselves from Chinese sources. So we do, yes. So we do work very closely with our principals on the R&D side as well.
Thank you. Thanks for your answers.
Thank you.
Thanks, Ashish. The next question is from Ankit Babel. Ankit, please go ahead.
Yeah, good afternoon, sir. So my question is, in the coming years, the share of manufacturing revenue is expected to increase a lot because you're working on this NMA, acrylamide powder, then PAM solid, and even the PAM liquid utilization levels are expected to increase. So in this 4 segments or 4 product categories, now assuming that the prices remains at current level, nobody knows what would be the future prices, but let's take an assumption that it remains at current levels. And your expected utilization levels in the coming years. So on peak utilizations, what kind of margins can we make in these product categories? Because this would be having a major chunk, major contributor to your profitability.
I wouldn't go into every product in detail because there are like you mentioned yourself, there are a lot of products, but the manufacturing margins are generally in excess of 20% on an EBITDA basis, and even larger in certain cases. So I think that's pretty much what I can say right now. I don't think I can tell you product wise.
That's fine, sir. So a blended basis is also helpful to me.
Yeah, I think it would be anywhere at a minimum of 20% going up to 40-45%.
Okay. And sir, just from my understanding, now the prices keeps on fluctuating. So I mean the final prices of the product, but at the same time, the prices of raw material would also fluctuate in line with the price of final product. So suppose if there is a correction of say 20-30% on the final product side, in that case, based on your experience, do you feel that the raw material prices also behave in the same fashion and that would help you to maintain your margins at least in the percentage terms?
So usually, we have two types of customers in our business. Now, let's say in the acrylamide business, acrylamide liquid business, we have two types of customers. One type of customer which works on a formula-based pricing, and those formulas are linked directly with the raw material prices. So there, our spreads are constant. There's also a spot market, and the spot market, the prices are completely dependent upon market condition. The spreads will vary according to that. Now, generally, yes, when the raw material prices move up, the prices of our product also move up. That's generally how the spot market also functions, and that's also how the formula pricing functions. But when it also, sometimes the opposite also does take place, depending on how the market is positioned at the time. Currently, for example, spot market prices are high, raw material prices are low, and they are reducing as we speak. So currently, the margin levels are higher than, let's say, normal. But sometimes the opposite also does take place. But again, we see it on a long-term basis. On a long-term basis, we have seen that the business provides good, healthy margins. And these are plus minuses which will continue to happen in the products always. On the polyacrylamide liquid side, basically it's a single price market. Every single customer in this industry, in the tile industry, buys the product at the same price. So there the prices are fixed, and we increase or decrease prices very seldom. So unless there is a compelling need to increase prices, the prices are kept constant. That is how it generally works. In the last 1 year, we have increased prices once. We are looking at another price increase during this quarter due to the increase in prices of things like caustic, which is again one of our raw materials for the product, and also acrylic acid, which is another raw material for the product. So because of the price increases in caustic and acrylic acid, we will be looking at a price increase sometime this quarter on our polyacrylamide liquid business. But as of today, we are covered with our import pipelines and our supplies, our stocks, to take us through the quarter without any adverse hit on our profit margins right now.
That's helpful, sir. And my second and last question is on your PEM solid business. So you did mention that you'll start the construction of the project somewhere in fourth quarter of this year, so somewhere around January, February. So by when do you feel you'll complete the the construction part, and by when the commercial production to start from here?
Yeah. So what we've mentioned is that from Q4, from FY22 Q4, our entire R&D team will start their focus into the polyacrylamide solid business. Today, we have certain products which they are working on in the R&D sector, and we have given everybody a target to complete all of these projects within this quarter. And from January, the entire focus at the R&D side will go to the polyacrylamide solid business. And we already have enough information to start placing orders for equipment and things like this. But we will continue to do some pilot reactions, ensure that the pilot reactions provide us with the necessary data that supports the design that we have already prepared. So all of this will be done starting from January, and thereafter the construction will begin. So I'll be able to give you more details on that. Probably the right time to give you the details in a clear timeline would be after Q4 FY22. Once the R&D team is fully focused on that sector, I'll be able to give you a much more clear timeline on the progress. But as such, we are hoping to complete it during FY23. We are hoping to complete the plant construction.
Okay. So whenever it starts, it will take, say, around 6 months to complete or 9 months. That's what I need to understand. Whenever it starts.
Whenever it starts, I think it should take us about a year.
A year.
Yes.
Okay.
It is quite a large facility. So considering the lead times for all the equipment and all that, I think it's better to consider about 1 year.
So the contribution from Pen Solid in your P&L can come only in FY24.
Yes, at the earliest, yes.
Okay.
Yeah.
That's it, sir. Thank you so much.
Thank you.
Thank you, Ankit. The next question is from Naresh VS. Naresh, please go ahead.
Can you hear us?
Yes,
Can you hear
Naresh,
me?
you're audible.
Yeah. So, good afternoon. My question is, we are witnessing production capacities coming up in India in specialty chemicals. So, is there any capacity being added up by companies in India for the chemicals which we distribute? If yes, how will it impact our business? Thank you.
Okay, thank you. So as of now, we are not aware of any capacities coming up for any of the products that we are distributing. All the products we are distributing, yes, a lot of them are specialty chemicals, but we have not come across any product which anybody has announced or that we have heard anybody is going to start manufacturing.
Thank you.
We have a question from Vishal. Sorry,
just one correction on that. I'm sorry, just one correction on that. We are going to start distribution of a product known as hexamine from this quarter. Hexamine is a product which is produced in India. I think Kanuria Chemicals is one of the large producers, and I just can't remember the right name right now, but there is another company also who is a major player in hexamine in India. I have heard that the other player, not Kanuria, but the other player is planning to increase certain capacity of that product. So correcting myself on the last answer I gave you, that is one product where we have heard of some capacities coming up, but that's a new product for us. We are going to start distribution of that only from this quarter.
We have a question from Vishal Jaju. Vishal, please go ahead. Vishal?
Hello. Yes, is my voice audible?
Yes, Vishal, we can hear you.
Yes. So, team, I just want to ask one question. Like, how are we doing in terms of volume versus value growth? Like, since last 2 quarters, our manufacturing business has seen a bit dip due to the increase in freight costs. So, I just want to have a glimpse. Like, how are we doing on this volume growth since last 2 quarters, and whether this manufacturing revenue increase or the stabilization has been driven by increasing prices of acrylamide, polyacrylamide, or there has been some volume growth as well?
Okay, Vishal, thank you. I could not hear you very clearly, so I'm going to answer what I could hear. Just a small correction in what you mentioned. The acrylamide business has not really been hurt by. We have not had any reduction in our acrylamide business, which we have been doing till now on a very large way in this year, because where we are hurt on the acrylamide liquid business is that our growth has been restrained due to the high freight costs. That is the major effect that it has had on our acrylamide liquid business. Because of the high freight cost, we are not able to increase our exports, especially to markets like the US, which are extremely large volume buyers. So that is where we are hurt, and that is why we are stuck with servicing the Indian industry and some of our export clients as we have been doing in the past, and we have not been able to grow further in that area. So that is the issue, because domestically we continue to maintain very high market share, and the domestic, whatever is, if the domestic market reduces, our sale will reduce, but we always maintain our 70-80% market share, and this quarter we expect that to increase to 90%. So that's just one thing I wanted to clarify from my side. The other question, if you can just repeat it again.
Yes, so I was asking whether we have higher margins in export market, and if yes, what if this freight cost continues to be elevated? Then how are we expecting, to volumes to increase in the coming few quarters? Because this higher freight cost will impact our export market, and if this freight cost will continue for, let's suppose, next 2 to 3 quarters, then how are we planning, to increase our volume side in the acrylamide and polyacrylamide business, both sides?
Okay. So, on the polyacrylamide business, we are not doing any exports. Polyacrylamide business is completely focused on domestic market. There is no export sales envisaged in the polyacrylamide liquid business that we are doing currently. Polyacrylamide solid, yes, once that plant is ready, we are expecting to export 50% of our production. So that will happen at that time. But polyacrylamide solid is a product which, let's say if we were to export to the US is currently dependent upon China as their main source of supply. So again, since they do not have a very large domestic production, I mean, they do have a very large import requirement. We will not be adversely impacted even if the freight costs are high, because the customers are anyway paying high freight costs from China. So on the polyacrylamide solid business, whenever that starts, we don't expect freight costs to be really a concern, even if it remains high in the future. Polyacrylamide liquid, like I said, we don't intend to export that product anyway. On the acrylamide liquid side, also, like I clarified, the domestic market, we are already covered it. Even if the freight costs remain high, the customers who are currently buying our product for exports, they are going to continue to buy it because they are anyway dependent upon import sources for their acrylamide supplies. So whoever is dependent upon import for acrylamide, there will be no change in that position. Whether the freight costs go up or down, their demand is going to continue because they have to import in any case. It's only those markets like the US, which has domestic acrylamide liquid production, where the business gets affected.
So just to summarize, with this increasing freight cost as well, we are likely to increase the volume. And if this freight costs come down, then we will have the additional opportunity to sell our products eventually in US market faster than we are doing right now. So freight, despite of this increasing freight cost, our demand is there in the export market, which will be gradually rising. And if the freight costs come down, then we will have the higher sales than expected, right?
That's correct. That's correct.
And sir, can you give me just ballpark figure, like what is the margin difference between the domestic market and the export market? Just a rough figure.
So generally the export market margins are slightly less than the domestic market. But the focus there, again, like I said, is more for market share to be able to de-risk our business from just being in the domestic market. But yes, generally the export market margins are lower than domestic market margins.
Okay. So that's it from my side. Thank you, team.
Thank you.
Thanks, Vishal. The next question is from Aman Vij. Aman, please go ahead.
Yeah. Good afternoon, team.
Good afternoon.
Yeah. So my first question is on the acrylamide domestic market share increase, which you are talking about. We are targeting for Q3. So from 80% or to 90%. So can you talk about some reasons and for the same, what will help us in gaining more market share?
Okay. Yeah. So acrylamide in India, there are basically two main producers of acrylamide. We were the first to start in 2013, and after that, a French company in Vizag started manufacturing acrylamide, I think that was in 2018, in January 2018 or something like that. So at that time, the market kind of got slightly divided, although we maintained our market share, which we had at that time 100% market share. But from 100%, it came down to around 70 to 80%. And now what we have been noticing in this last few weeks, and especially in this last month, is that that company has been focusing more on their downstream productions. They are having certain production issues at their end, again, due to some supply chain disruptions. And they have started gradually to exit the domestic acrylamide business. Because number one, that was never their core activity. Their core activity is the downstream production. And because of that, we are seeing a lot of the customers who we had intentionally let go of due to their lower price requirements, who then went to our competitor. They have been coming back during this last few months. So because of that, we have seen our market share increase. The demand increasing. So that is why we have said that we expect to hit 90% market share.
Sure, sir. That helps. The second question is on the export side, the acrylamide. So, could you talk about in FY19 how much tonnage we had exported and say FY20 to give an idea of what was the normal run rate we were doing and what is it now in FY21? Exports, acrylamide.
I couldn't hear you clearly, but I think you said you wanted to know how much acrylamide we've exported, right?
Yeah, what we used to do pre-COVID when there was no issues of this container, and how much will we be exporting this year, just to understand the dip.
Okay. That's a good question. Unfortunately, I don't have those numbers with me right now. But I can tell you that in FY20, I believe we had around of our acrylamide business, 40% was exported in FY20. And in FY21, that came down. And in the last quarter, we had about 35% of our acrylamide sales was exported in the last quarter. I don't have it in terms of tonnage. I'll have to get back to you on that. If you can, I'll try to share that in one of our future press releases.
Sure, sir. That will be helpful. The next question is on the PAM liquid side. So you have talked about in October, we saw a good jump in our utilization levels. So for Q3 and Q4, what kind of utilization levels can we achieve in PAM liquid?
Okay. So in Q3, in October, we have started to our capacity utilization started to increase due to the sudden increase in demand that we're seeing now from the Morbi market. And if this continues the way it is, I would expect that we should be able to reach around 40 to 50% capacity utilization by the end of this financial year.
Sure, sir. Just one final clarification. So you had talked about acrylamide utilization level of 60% for the quarter. But sir, if you look at say 100 rupees utilization and say 200 crore annualized run rate, so if it was 60% utilization level, the acrylamide sales should have been 30 crore, but our manufacturing sales itself was like 25 crore. So are the utilizations level maybe for the quarter lower, but maybe by the time we were exiting, it went to this high. So could you give this clarification in this number?
Yeah, so basically in July and August, the utilizations were slightly lower. The utilization started to pick up in September and has further picked up in October as well. And we expect it to further pick up again in November.
Sure, sir. This will help. Thanks for the answers.
Thanks a lot.
Thank you.
Dheeraj Sachdev. Dheeraj, you had a question sometime back. Has it been answered, or would you like us to take up your question?
Yeah, I just had, I'd gone through your annual report. You mentioned your estimates of 50 crore capex and your estimates on the revenues. But when I look at the capex item and the cash flow item, those 50 crore capex is not fructified. So what stage are we in terms of that capex fund? Because the internal cash flows may not be sufficient to fund that capex of 50 crores. And you have been very vocal about it in the last 2-3 years. And we have not seen the capex item appearing at all in the balance sheet. So why be so vocal in upfront, and 3 years there's been no tangible fixed assets creation from your side? And how are we going to fund it?
Okay, that's a good question. I apologize for not having clarity on that given to you earlier. The basic issue here has been that the 60 crores, the capex that we are talking about, that capex is towards the polyacrylamide solid plant. And on the polyacrylamide solid plant, like we mentioned earlier today as well, the work which we are focusing on, the R&D work over there, starting from January 2022 again. We were focused on that earlier, and we had to put that on hold during COVID. Now, what happens is that when we are working on a polyacrylamide solid production, a lot of work has to be done in pilot facilities. These pilot facilities are located at our Jagadia plant, whereas our R&D team, our R&D facility is located at New Bombay. And during COVID, there was a travel restriction, and people could not go from our R&D lab to Gujarat to work on the pilot machine and all of these things. So when that happened, we basically had an R&D team which practically then became idle during that period because they could not go and get those works done. So what we did at the time is we decided that let's then do other products in the meantime, because nobody had an idea how long COVID is going to continue. Nobody had an idea how long these restrictions will continue. So everything had to be decided at that moment on what information was available at the time to us. So what we did is we decided to start working on these other projects, which are the acrylamide solid as well as the NMA. And so that is when that work began over there. Then once we started that work, we said, now let's complete this before we again go back to polyacrylamide solid, because once we get into polyacrylamide solid, we need to be fully focused on that. We can't have a half-hearted approach when we start working on a project like polyacrylamide solid, where the investments are also large. So this is how basically we took a conscious decision to reallocate our resources in terms of the R&D function. So this is why, although we've been talking about it, you don't see the capex. Although yes, we have done some capex. The building foundations are already ready at the plant. We did all of that, the civil work before COVID. And so we have done some of that investment, which is all done through our internal accruals as of now. The other capex is whatever you've seen, they have gone in towards the acrylamide expansion, the acrylamide solid expansion, the NMA expansion, the polyacrylamide liquid expansion. All of these capexes you would have seen in the last 2 years in our balance sheet. But like I said, the building work that was done on the polyacrylamide solid. All of these are the CapExes you would have seen, but the major CapEx you will start seeing from next year. Now, how we are going to fund that? As of now, we have not totally decided on the funding. There are a lot of things people keep suggesting to us. Starting from rights issues and QIPs and loans, and there are lots of different suggestions which keep pouring to us from all sectors. But we have not yet taken a final decision on that.
Yeah, so how much will be the fundraising in case, even if you have to take? We are not talking about the sources of funding, but how much will be the gap or the shortfall? You will have to fund it
through. So like I said, the funding is completely open. Right now, we are still discussing. Sorry.
So Yanup, you're still missing the fundraising. What is the gap that you have for fundraising?
Anupji, did you get Dheeraj's question?
I think. Sorry, your voice is correct.
He was asking what is the gap in case, even if you look for some. Can you hear me? Okay, what Dheeraj was asking is
now I can hear you, yes.
What Dheeraj was asking is that if at all there is a gap between the fund requirement and the funds. Friends, just hang on for a minute, please.
Yeah. Sorry.
Yeah. Can you hear me now?
I can hear you now, yes.
Dheeraj, would you like to go ahead with your question again?
Yeah, so while you're keeping the options open for fundraising from various sources, I just want to know what is the gap in terms of funding? Because the internal accruals over the next 3 years time period, how much will that fund your 50 crore capex, and how much are you? I mean, there has to be some strategy, some sense on the gap. While you're keeping the options open, we would like to know how much could be the dilution or the debt capital fundraising.
Okay, so to answer your question, there are, this project, the funding required for the project, of course, is one part of the funding requirements. But our company is growing. We are looking at a lot of other things as of now, which we will share with you as we get as things start to get finalized and fixed. So. The funding requirement and how much to be funded will be a total of all of our fund requirements. It's not going to be, we're not going to be going to raise funds just for a polyacrylamide plant. So when we do go into raise funds, it will be a collective raising of funds based on the various things that we are currently contemplating.
Yeah, but can you give a ballpark figure? I'm still not getting some specific answers.
I'm not able to understand the purpose behind your question, unfortunately.
Purpose is simple, sir. Last 3 years, you have been vocal about the 50 crore capex. You're talking about R&D initiatives being taken on pilots, etc. The funding is not yet in the balance sheet. How much is internal? How much is going to be the fundraise across? There is no clarity. This is what I'm seeking.
So I could give you any number, Mr. Dheeraj. I don't understand what is the purpose of your question. I could tell you I am
recording stopped.
The purpose is very clear. If something we are looking at in a company from a 3-5 year perspective, we would like to know how much the balance sheet will be leveraged or diluted.
Recording in progress.
I do not have an answer for you, unfortunately, Mr. Dheeraj. We will share that answer when we have clarity at our end on that answer. I will share it with the
projection in your balance sheet even before the fundraising is even thought of. So this seems to be pretty premature in terms of projecting in your balance sheet and annual report and estimates of revenue, etc., when even the fundraising is not even finalized.
I think that's only a concern when we feel the fundraising is going to be a challenge. We do not feel fundraising is a challenge as of today. We have banks ready to finance the entire 60 crores even today. So we don't believe fundraising is a challenge as of now for our business, and that's why these numbers are not extremely critical for us right now to have a decision on that. We would like to decide our fundraising based on the collective fundraising that we require for the business going forward. We cannot fundraise frequently and all the time. So we would rather fundraise when we have a better clarity on our future fund requirements. But we don't feel any challenge in raising a fund of 60 crores. It's never been a concern that I would have any challenges to raise that fund. If it was a concern, yes, I would be worried about that. But fortunately, our business is strong. We are very confident, and even the promoters are extremely strong. We do not have any concern about raising of funds for this project.
Yes, no, I think there was some misunderstanding from the way I asked. It is never a challenge. I agree to what you're saying. It is just that I wanted to know the gap, and you've answered it that maybe 60 crores, maybe the kind of a ballpark requirement of fundraising, whether it's debt capital or raising of equity fresh. Fine, I think that should be maybe whenever you have clarity, whenever you have clarity on the
that is not what I'm saying, Dheeraj. That's not the gap that we have today. We do have good funds within the organization as well. So that's not the gap which I'm talking about. But if you want a general idea, I would probably, if it was a standalone, if we were just looking at the project on its own, then we would probably look at some level of bank financing, maybe up to 30%. Maybe we would look at a bank financing. The rest we would probably look at some sort of external funding, either from the promoters or from the, not the rest, sorry, maybe another portion of that would come from maybe external fundraising, and the balance would come from internal accruals. But we don't intend that we will need to raise the entire 60 crores from external sources.
Fair enough. Thank you so much.
Thank you.
There's one last question. It's been typed out from Mr. Ronald Dalal, who is asking any indication on when you might be able to launch the polyacrylamide solid product from our own 10,000 capacity. And by when can you fill such a capacity, and how confident are you about the technology for setting up the commercial project? And if we have any technology partner on the polyacrylamide solid business?
Yeah. So I think most of these questions have already been answered, but I'll just repeat them. So we expect to have the polyacrylamide solid plant ready sometime in FY23, by the end of FY23. We expect that the numbers from that should start showing in FY24. In terms of technology, we are working with some potential customers of polyacrylamide solid who are assisting us with some of the technology aspects, especially when it comes to product-based, how to say, to get the product right for their own requirements. So yes, we are working with some potential customers on that aspect. So yeah, I think that answers most of those questions. Have I missed anything?
No, I think you've covered everything. And last one is from Mr. Abul Mohammed. This question is, by when do you plan to list on the National Stock Exchange?
So we were hoping to list as soon as we could, but I believe there are certain conditions on the NSE. For example, your company has to, I believe, be 3 years with minimum net worth of 70 crores. And I think there are certain such, certain such restrictions on listing. But yeah, once we meet all the criteria, we are already at 100 crore plus net worth. So once we meet all of the criteria required for NSE, we would surely list on the NSE.
I'll take another one. Friends, any other questions that you would like us to take on? Okay. On behalf of all of us at SKP, I would like to thank Mr. Jatia and his team for giving us the opportunity to host their post-result webinar, and I look forward to hosting them for the next quarter as well. Thank you, ladies and gentlemen, and have a nice day.
Thank you, everyone. Thank you.
Thank you, everyone.
Recording stop.